Welcome to today's video. In this lesson, I'm going to show my simple gold day trading strategy using just basic support, resistance, line charts, and a powerful entry trick on the 15 minutes time frame. This strategy gives me high probability entries with sniper-like precision. And yes, you can use it every day. Trust me, guys. Without wasting your time, let's dive into it. You can see right now I'm on my chart. This is gold. So this strategy is majorly for gold. It has a very high win rate on gold. So we are going to back test it. But first, I want you guys to understand the strategy. Starting from the higher time frame, let's say probably daily time frame. Okay, daily time frame. We need to analyze either daily, you can use 4 hours. You want to identify the market direction and draw your support and resistance zones. These zones must be fresh, not zones that have been touched multiple times. So these zones must be very fresh zones. Like you need to mark out zones like your support and resistance zones, which are like live zones. Okay, so looking at that, let's mark out our zones. So there are different steps that I'm going to be using to teach you guys this particular strategy, and I believe they should all apply well. Okay, yes, there are different steps. So simply by following the step, you can be able to trade this on your own. So let's mark out our support and our resistance zones. So I already put down those steps already for you. Just by following the steps, it should be very, very good. So looking at the steps, I put them here. Step 1 says fresh breakout zone, 15 minutes, blah 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 blah. Okay, Mr. Izzy simple day trading strategy. In rate very high with discipline. So discipline is very key with this strategy. The two needed TradingView, MT5, and all of that. Let's dive into the strategy, looking at the steps. I don't want this video to be too long, but it should be long. You guys are going to have patience. If you don't understand anything, you take a step back, like you rewind the video backward, you backward the video and watch again. Step 1 says top-down analysis. Start from the daily or 4 hours. Identify the what? The market structure, the main market structure, trend direction, uptrend or downtrend. Draw clean support and resistance zones using wicks, candlesticks. Then mark fresh levels in the market. So what this step 1 is saying is that we should draw our support and resistance zones. I'm going to be using the horizontal line tool to mark that out. Where am I getting these two from? For those that don't have this plate here, you can check on your TradingView here on the left side of the TradingView. Just once you click on the second one, you see trend line. On under lines, you will see horizontal line. So because I already have my own on my favorite list, that's why you see a lot of them showing there. So once you click on the two, you can now be placing them. So mark your support and resistance zone. What are support and resistance zones? Points in the market where there are multiple touches. Okay, so you can use your daily time frame, you can use your 4-hour time frame to have a very clean view. Make sure that the one you're drawing is relative to the current market. Okay, now we have here, you can see what price did here. We have here, so for a clearer view, you can even turn to line charts for a clearer view. So I'm on the 4 hours time frame. You can see that there was multiple touch here. We have a touch here. We have price touching here. You can see another one right here. The multiple touches here, 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 here. So we want to identify all those zones as possible as we can. You can see how price kept touching here a lot. So this is a zone, probably support and resistance zone. At this point, it was a support, at this other point it was a resistance. It was a resistance here. So like that, you keep marking out all those zones. Good, respect them a lot. Good, respect them a lot. So why I say turn to line, so you can be able to get them. See this one, see what's happening here, see what's happening here. So any point where you see there are multiple touches, that's a psychological zone. That's a support and resistance zone as well. So let's mark out all those zones. Can see another one there. Can see another one there. Then here's the highest point, I guess. So turn back to line charts. I can put it this way. So that is step one. Then we identified market trend as well. Sorry. We identify market trend as well. So if you look at the market, you can see that it's trending all the way up. How do I know it's trending upward? Because I can see that price has been doing higher consecutive higher highs in the market, moving up like this. So you can see higher highs in the market. Higher highs is a sign that price is bullish. Okay, so possibility that price is going to keep buying is there, and it's very high in this market. So as today I'm making this video, you can see this is 6:49 p.m. this Sunday, 6th of June 2025. Okay, so now there's probability that price is going to keep going above, and with the current economic news, the wars that are happening, people might probably want to buy good. Anything can just be happening, or good can melt down, because I know that there's a lot of confusion in the market. Now back to the strategy. Step one: identifying market structure and identifying support and resistance, which we have done. So let's see what the next step is. The next step is drop down to, which is this one, drop down to what? Okay, drop to 1 hour. Look for fresh breakout zone. Now this FBZ, that's the fresh breakout zone. FBZ, I'm going to practically show you guys what it means. Okay, look for where price just broke structure that day. Sell for a sell, price break below a previous support. For a buy, price breaks above a previous resistance. Make that zone the fresh point on the 1 hour time, on the 1 hour chart. This is your FB or FBZ. That's a fresh breakout zone. Now let's identify. Let me explain that step 2 for you guys here. Now what it means is that, let's say you have a zone. You have a zone right here. So price keeps going up like this on the, remember you're on the 1 hour time frame. So you want to mark a zone like this. Once price breaks out this way, you want to mark here. Let's say you meet chart like this on a 1 hour time frame. You want to mark this whole thing because it's still line chart. You want to mark it out like this. This is what you call fresh breakout. This one is fresh. You don't care about these other ones. This one that just happened is the fresh one. You want to mark the whole zone out like this with a box. Okay, you can get your box here under under brushes. You can get your box under brushes. You see, under shapes. That is still under brushes. Under shapes, you see your rectangle, and you see other rectangles you can use. So I like using the rectangle. So you mark it out. You mark out that zone like that. Example of that is, let me go to random 1 hour time frame. Random 1 hour time frame. Example of that is like, it's like somewhere here. Like let's say here, for an instance, here now. See here, that's an example. Here too, it's an example. So all depends on where you meet the market at that moment. Here too, it's an example. No matter, even if it is very tiny, no matter how tiny it is, even if it's very tiny as this is an example too. As tiny, no matter how tiny it is, once it's something like this happening, you mark it out. You mark it out there too. So you see, you mark all of them out, no matter how tiny it is. So you just have to mark them all out, and that is it. So once you mark out that thing on your 1 hour time frame, let's see what the steps say we should do, what we have to do next. So once you look at that, so that's your fresh breakout zone. So what do you want to see? You want to wait. So this is your this is your fresh breakout zone. So I've just told you guys how to mark the fresh breakout zone. Over to step 3. So step 3 says wait for retest. So for this case is buy. You want to wait for price to basically retest that box that we drew. Price should come back to the fresh breakout zone, that's the FBZ, to retest the fresh breakout. Okay, once price touches the fresh breakout zone again, prepare to drop to 15 minutes for entry. So once price comes back down here, once price on the 1 hour time frame, once price drops down here, you need to prepare to drop down to 15 minutes to look for entry. You need to prepare to drop down to 15 minutes to look for an entry. That's what step 3 says. Now let's look at the next step. Over to step 4. Step 4 says that we now look for entry confirmation on 15 minutes time frame. At this time, you should already be on candlesticks. Okay, you should already be on candlesticks. So now, looking for that's 15 minutes, right? Yes. So step 4 now, switch to 15 minutes chart. Look for a clear engulfing candlestick pattern in the direction of the original breakout. So in this case, it's a buy. So we should be looking for like an engulfing candlestick. Let me use this tool to draw my engulfing candlestick. So we want to see an engulfing candlestick. No, that's not straight. Engulfing candlestick is something like this. So this is what an engulfing looks like. So when you see a sell candle and a buy candle engulfs it, so that's like what an engulfing is like. This is a sell candle. So that's an illustration. So price sold to this point, and then a big candle like this covers this candle. That's what an engulfing candle is. This is what is called an engulfing. When you see this kind of thing, this candle form here, then what that means is that you now have an entry. You enter at this point and you put your stop loss below this low. So when you turn to your candlesticks, sometimes this thing you see as line may have wicks. You understand? So make sure you cater for the wicks wherever it is. So now let's see what the next step says. Let's not rush. Now it says if enter at the close of the engulfing candle. So once that engulfing candle closes, you enter. That's why you pick your entry. Okay. Now what's the next thing to do there? If there is no engulfing and price breaks, this is to look for swap zone. Okay, if there is no engulfing and price breaks to the opposite direction, it becomes a swap zone. Okay, now wait for an engulfing in the new direction to trade the reversal. So what that one is saying is, let's say for instance price comes to this point, to this your box here, and didn't give you this engulfing, and it breaks it. Once it breaks it, if it comes back to it, this zone becomes a swap zone. So I expect that if it gives you a bearish engulfing this time, price should continue downwards. So what you'll be looking for now will not be buys again. It will now be sell. Okay, it will now be sell. I'm still going to explain, let it not confuse you. If you see a bearish engulfing, you will no longer look for buys. What you will now be looking for is sell. That's what you now be looking for from here. So take note of something like this. Take note of this kind of pattern. And this one. So this is the continuation. The other one is like once price breaks. So this is like the fresh breakouts. So on it, once price comes back to it, boom, you take a buy. So for this case, once price comes back here, and refuses to give us an engulfing candle, breaks, wait for it to retest. If it gives us an engulfing candle, you take a sell. So in these cases, this is called swap zone. This is called the FBZ, which is the fresh breakout zone. This is called the fresh breakout zone. This is the fresh breakout zone. Why this one is called the swap zone. So this scenario is for the case of a buy. Same applies for the case of a sell. It will be the inverse. So for the case of a sell, it's going to look like something like this. For the case of a sell, it's going to look like something like this. This. Price breaks, retest, then continuation to the downside. Where this becomes, this was the zone here. Then once price gets into it and we see a bearish engulfing, we take our entry from there and target 1:1. That's it. You have a trade. Now for the swap zone, for the bearish swap zone, we have something like this. This price breaks, instead of retesting, it breaks above, then the test give us an entry. So that's the swap zone for. So here was the zone where we made the market. Here was where we made the market. Price broke. Instead of price to come here and give us an entry, it broke above again. That same zone becomes our entry. Then look for buys instead of sell. So you see how it works now. So this is for sell, this is for buy. These two. Okay, so now having known this, now let's look for a real example. Okay, so let's take for instance, which one are we going to use now? So we still have to have in mind the current market, right? We still have to have in mind the current market direction based on price action. Okay, so at the resistance here, price should be going downwards, right? Good. At the support here, price should be going upwards. So now price is at the support, but that does not mean that from here price will continue going. So we need to still follow these principles to know when price is actually going up, when price has actually started going up, or when price has actually started going down, because it's more about scalping. It's more about scalping. So now let's look for a live example. Now we are on the 1 hour time frame. Take a look at what happened here. Let me use my last trade for an example. Let me use my last trade. But okay, let's look for a perfect setup first. Let's look for a perfect setup. I think we have one here. We have one right here, but this case was a case of a swap zone right here. We have one right here. This is very far. There's one I just traded on Friday, which was here. So market open Friday. I saw this zone here. So this was Thursday, Friday. So price opened Friday. This was Friday. Okay. Here, this was Friday. This Friday. So this was the zone. I saw this zone here. Price marked this zone here. This zone here. Okay. So I had to wait for 1 hour to come back. So if you look at the zone, this was the zone. It went all the way to the up here. I cut for this week, so this is the zone. So price has come down and is now back into the zone. You can see it gave a long wick rejection here. So let's dive down to 15 minutes time frame and see what happened there. Now the rule says that we need to see an engulfing candle on that box. So when price came here first, it didn't give any engulfing candle. So what happened? Price came back to it again. Still on the box, price now gave an engulfing candle. Look at the engulfing candle there. You can see it's sitting there pretty good. Look at it. This is an engulfing candle. Where there was a buy and price engulfs here a sell. So what does the strategy say? That from the engulfing candle, you look after the engulfing candle is closed, which is here, you look for what? Sell. Put stop loss above. At this point, it was supposed to be here, but since price has given something like this, my stop loss will be here. Then target what? 1:1. That's why I told you guys that this strategy can give 1:2, can even give more. Sorry, 1:1. This is 1:1. You can see what happened after we entered. What happened? Price went above. Somebody like me, as price is going above like this, I will add on that position. If it goes above like 10 pips, I will add on that position. So at this point, I must have added one more position. But I caught a striper entry with the second strategy that I will show you guys too. So at this point, you see, it never fails. It never fails. So what happened? Price went down all the way. Boom. At this point, I will take partial profit and set break even, and then hold. My next target profit to be support this resistance level here. And that take profit zone will be this point or even this point. I can take profit here. I can take profit here. I will just mark zones and just keep taking partial profit. So imagine I held this market to almost here, and I added the position at this point because I have a strategy that I will teach you guys that is very, 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 very. I have a very, very tight stop loss and very good for scalp. Okay, I'll still show you guys how that one works. So you can see this like it gave 1:2, it gave 1:1, you take partial profit, and that is it. So that's what it's all about for the swap zone. So let's take what the other ones are saying. Step 5, I think I've covered this already. Step 5 is talking about your risk management, stop loss, manage and take profit. So it's talking about place just above or below, placing your stop loss above or below, depending on whether you're buying or you're selling, like I just showed you guys now. Then target 1:1. First of all, secure your 1:1 before you start looking for any other profits. Okay, secure your 1:1 before you start looking for that. So move SL to break even or close the trade before the new day open. So this is like a rule. So let's say for instance you caught this trade when market trading day was about to close. Market was about to close. It's either you close out in profit because you must always be in profit. Okay, majority of the time, no strategy is 100%. Majority of the time, you'll be in profit. I'll advise you take it for that day and wait for another opportunity for the new day. But if you're too sure of the trade, set break even and take partial profits because anything can happen. This is gold and this is forex market. You are not gods. Anything can happen. Okay, you take partial profits and you close for that day. Then the next day you look for fresh setups. This thing play out every day. Like take your time to backtest. This things play. I don't want this video to be too long without been backtesting. These things play out every day. Sometimes some days no trade. Okay, it has a very high win rate, almost 98 point something, 98.3, 98.2 win rate. Okay, so now that is it for this strategy. I don't know if you have any question, you can ask me if you have any question. But I think this was very, very simple. This is a simple strategy that anybody can do. Now for the coming week, probably you can see on, let's go to 1 hour time frame. We're on a support zone. Price is trending downwards. But on a general note, you can see that on a higher time frame that price is bullish. Okay. We are so aware of the fact that gold is bullish. Even without drawing this thing, it looks like it has broken, but it's still bullish. It's still bullish until when it finally breaks this point. Okay. But I know that gold is bullish. What is probably possible to happen on the white time frame now? You see that price has hit this our resistance line that we drew. If I turn to line charts, I can see something. I told you guys something. Cater for even the small ones. I cannot take a buy because price has gotten to this support. I will need to wait and confirm that price is not going to respect this zone. It's going to see this zone as a swap zone. That is when I can be safe to take a buy. Instead of taking a buy, I will be looking for a sell. I'll be looking for price to come here and give me a bearish engulfing, then come down here before I can talk of looking for a buy. But if this does not happen, the next thing that I'll be looking out for is for price to do something like this. Come here, break above, come down here, give me a bullish engulfing, and then I'll enter. Target TP, target my 1:1 first, target TP, target TP. I can decide to hold it. All this looks like liquidity to all the way up if I want to. You get? So, but I must see this confirmation before I trade. I will not just enter blindly. So it's always good to wait for the day, wait for your confirmation before you trade. So this strategy is as simple as it sounds, and it works. Trust me, guys. So I want you guys to start giving it a try. Practice it out. If you have any question, ask me. I'm here to direct you. So I think that is it. Let me see if there is any step that I'm missing out. The other steps are based on trading psychology. So important rules to stick to. Only trade same time, same day, fresh breakout zone. That is the FBZ setups form. Okay. No what? No carryovers. Like I told you guys, no carryovers. Don't carry over these trades setups. For the day you close, or if you must carry over, which is highly risky, sell break even, take partial profit. Don't reuse FBZ or swap zones from previous day. So it must be fresh. That's why it's called fresh breakout. Okay. Then trade only during London session or New York session. This one, sometimes you can even get trade these days. These days, gold plays out during Asian session. Market open, gang, you don't they cancel. This one is just for formalities because it's advisable to trade London New York session. But these days, trade can give us a wonderful setup in the morning, early morning. That's Asian session safe. So then stick to 1 or 2 setup per day. Once you've made the profit for the day, don't guys start forcing the market. It's better you make $20 and you close for the day. You make $100, depending on your account size. You make 10%, you make 1%, you make 2%, and you close. Don't be forcing the chase. Yes, and once you've gotten it for that day, you can take one more, or you don't even take again. You go wait for the next day because price will always bring these setups every day. So what's the point trying to force the market when you can just take the one of today? See it like a business. You can just take the one of today and you close. You wait for the one of tomorrow. You take at the end of the week. You calculate how much you've made. You see that, damn, you're making more than someone that has a business and goes to work and do all the hectic physical jobs, and at the end of the day, he's not even making up to what you've made. So you just need to be content. This is where you yourself need to now understand yourself. You understand? It really has to do with trading. Strategy is not enough. Everybody has his own test when it has to do with profit. You understand? Everybody will make profit, yes, but some people will not take profit, some people will take profit, and at the end of the day, some people will be profitable, some people will not be. Because if I have a target to make $100 and I'm seeing price giving me $50, and that is the point where price wants to reach for the day, That is the point where price wants to reach for the day and they didn't take profit. The other person that closed at $50, if price retraces against me and start going up, I may close at 0 or minus. The person that closed at $50 is in profit and I'm not, all because I had a target. So that was my test, my financially my greed level, my appetite. That was what my appetite cost for me. And because we differ, the other person was more profitable than I was. So these are the things you have to put under consideration once you start making money, once you start trading with a strategy. Because if it's for price to give you profit, to give you. If it's for price to give 1:1, to give you. Now, there's a probability that some days you will see 1:4, all of a sudden it just spike like some news fundamental days that, or days that are not fundamental. Good can just be crazy. You just see spike that will give you 1:4 within the blinking of an eye. Phew! I've experienced it before. There was a day I was coming back from work. Good. I didn't even know there was news. I was still in the box and I opened my chart from how many I was trading cents then. From how many cents I saw like 3,000, 2,000 cents. I was like, Jesus. Within a twinkling of an eyes like this, one candle just shoot up all the way. So I don't set TP, but I mark my TP. So that when those days come, I will enjoy, I will celebrate. So that's, but always take partial profits. Okay, take partial profits. So that's where we call this particular strategy a wrap off. So I'm going to be showing you guys the next strategy, the one I use in catching sniper entries, like scalp entries. That this one has a very high win rate. The other one also have, but this one have higher win rate than the other. But the other one has a very tight stop loss. This one could give wider stop losses. The one that has a very tight stop loss and can give you 1:11, 1:10, 1:7, 1:4, 1:2. Gives you maximum profit. Okay, so that's what's different. Thank you guys for sticking to this video up till now. If you're not subscribed to my YouTube channel, do well to subscribe and also follow me on all social media handles, all from Facebook to YouTube to Instagram. Sorry, from Facebook to Instagram to all to Twitter. So thank you for sticking to this video up to now. This is where we call it today. Have a wonderful day.